What is up, family? This is your man, the master trader himself here, Gideon. I'm here back again with another important video. Today is a very important day in our lives because we are going to be exposed to trading like the banks do. We're going to be exposed to a very important topic, one of my favorite, institutional funded candlesticks. Ensure that if you don't understand what a candlestick is, watch that video concerning what a candle is. So watch the video concerning candlesticks so that you can be able to understand what we are talking about. So basically today we are starting this important one. Mainly it looks into the way banks trade, the way banks move the market. In order for you to really profit maximally like the composed man do in the market, you need to know this topic by heart. Ensure that you practice it, ensure that you do it over and over and over and over again to perfect your abilities to spot these candles in the market. Because basically if you just learn this, guys, you can just be trading using this. So that's the thing. We have done a lot of talking. So what is an institutional funded candlestick? An institutional funded candlestick, this is the last down or upward candle preceding an upward or downward movement. Guys, if you have not done the market movement video, ensure that you do it, because you have already talked about the upward movement and the downward movement. So I believe everybody that is watching this video has already watched that video. So that's the thing. So sometimes this institutional funded candlestick is called what? It's sometimes called an order block. So if you hear people talking about order blocks, they're actually just trying to say an institutional funded candlestick. So that's the thing. So you hear big institutions saying we are only going to enter the market when it reaches an institutional funded candlestick or when it reaches our order block. What they are trying to say is that we are only going to enter the market when it reaches an IFC candle. So if you trade currencies, you are into so much of fundamental kind of trading, ensure that you know these simple terms. Sometimes they will say we're going to enter the market on the sponsorship candle. So it's sometimes called a sponsorship candle because, trust me, it can sponsor your life. It can really sponsor your life. You see what I'm talking about, people. You will see it. Just follow me closely, people. Just follow me closely. You will see. So where are they likely found? Where can we find these institutional funded candlesticks? Where exactly can we find them in the financial market? Where exactly? Because if we know exactly where we can find these institutional funded candlesticks, trust me, we are home and dry. So mainly they are found on support and resistant areas. Ensure that you know what a support and resistant area is. Watch the video if you have not yet. They are found on flip zones. I've already talked about what a flip zone is. And at the break of market structure, people have been talking about break of market structure since the very first day or first video of this course. So we have already done market structure. So they are found firstly on support and resistance areas, secondly on flip zones, thirdly on breakages of the market structure. Okay. So what is a flip zone? So let me just do a bit of a recap to some of you who just jump. I just want to learn institutional funded candlesticks because you won't get anything if at all you don't understand what a flip zone is. This is simply an area where support becomes resistance. This is an area where support becomes resistance. So this is what a flip zone definition is. Here is an illustration. So here, guys, we have been saying that this is what? An upward movement. This is an uptrend movement. This is a upward movement, and this is a downward movement. But before guys, before the market changes direction, it's moving from an upward movement. We have it's making series of what? High highs, lows, high highs, lows, high. Then the market decides that I need to go down. What will happen is that the market will break the market structure. We have already talked about breaking of market structure. It will break the market structure. It will come and have a retest. Maybe it can be on this just here. So which simply means what I'm trying to say is that the market can break from here and have a retest here and go down. Yes, that can be possible, but sometimes the market goes way beyond there to touch your IFC zone or your IFC candle before it can eventually go down. You understand what I mean, to touch your IFC candle. But now I want you to understand what a flip zone is. So we will be taking I will be taking you slowly by slowly. Don't push yourself to understand now. You get the concept very soon. You get it. So I want you to understand that the moment the market changes direction, it breaks, then it comes, then it goes like that. The moment it touches, guys, the moment it touches this previous lower high and goes down, this is an indication that the market has done what? It has gone down. It has changed its market structure. It has changed its trend from an uptrend into a downtrend. So most traders, guys, what they do is this. The majority of traders, what they do is this. They will wait for the market. They'll be watching the market moving like this. It reaches here, moves like this. But everybody will notice to say that okay, there is a break of structure. But them guys, what they will do is that they will enter from here, guys. They will make orders from here, thinking the market will do what? Will go down. Then they will lose their money, guys. The moment they lose their money, what the market is looking for is an institution of 100 candlestick from here, guys. You understand what I'm talking about. So you will not enter from here. You are going to enter from here, guys. That's what I'm teaching you. Entering from here, guys. Not entering from here. Entering from here. You get to understand very soon. So the moment the market comes here, the market will eventually go down. And the moment the market goes down, it will come in this zone, and some traders will enter here and they'll go with the market. Majority of the traders will only catch the trade from here because they will confirm to say that all right, it has done the retest, it's now in a downtrend. But by the time these traders are entering from here, it simply means you are already in profits. You're just adding more positions from here. You've already entered from here. So I'm teaching you how you can enter from here, guys. So that's the thing. That's a concept here. So basically, it can come out in such a way as well. See what I'm talking about. The market can be moving in an uptrend like this, guys. Then the market breaks structure. Then it reaches a flip what? A flip zone. So a flip zone is a change, like a change in market direction. You have seen, right? It was in an uptrend. It has broken the market structure. Then it has retested here to confirm to say that there is a change in what? In market structure. So the first qualification for us to spot an IFC candle is seeing what? A flip zone. So the moment you see this flip zone, mark the flip zone, mark it like that. Or the moment you notice a break in market structure, mark it like that. Well, we have already said what? An IFC candle is found on areas of support and resistance. It is found in what? It is found on flip zones. It is found in where? It is found on breakages of market structure. So already here, this is what? This is a support. If at all you see it from here, the market is coming from here, there will be a resistance up there. But here the market had to touch their support. The first point is what? It is found support and resistance. So it will go like that. This will be your resistance from the top. Then there will be a breakage in what? In market structure. The market structure is going up. Now it has broken it because it has broken the previous lower high. So the moment it breaks like that, guys, what will happen is that it will go a bit here again, guys. It will go a bit here. You see, sometimes it will just go directly in an IFC candle, but sometimes it will just touch that point, that area, and it will make a flip zone. So there will be a change in what market structure. What was previously what a support is now a what is now a resistance. You have seen, right? It's now this was a support, a previous support is now, it has changed into what? It has changed into a resistance. So some traders will make orders, yeah. That's how people trade. That's how people lose money. They'll make trades here, but you, from Trading Billions Academy, you will just relax and you just be watching the market whilst relaxing, even drinking some juice whilst you're waiting for the market. The moment you see it go like that, then it will come back, it will put them in negatives. Their stop losses will be somewhere here. It will hit their stop losses. By the time it reaches the IFC candle, that's where now you enter from here, then you ride with the market. Guys, I'll show you practically what I'm talking about. Just relax. So basically, how do you mark an IFC candle? We have said to say that an IFC candle is mainly on the top side or on the downside of the market structure, right? Or market trend. So the top candle on the market trend, in most cases we have talked about engulf candles. Hopefully you've watched the video about engulfing candle. Yeah, engulf candle. So this candle has engulfed that one. So what you do is that you mark up that. You mark up from the top of the week, from the top of the weeks. You mark it out from until the bottom of the opening, into the bottom of the opening previous candle of the other market trend. So this one, the market was coming from here, coming like that, then it started now going down like that. Here, if you notice the breakage in market structure, that's where you mark your IFC candle. You understand, just relax. The only thing that I want you to learn from here is the marking up. So you mark it like this. This is how you mark it up if you're marking it from above. So just get that concept from here. And if you're marking out it from down, sometimes it may not be an engulfing candle, but you can mark it out like this. Yes, so this is how you mark it up when you're marking it up from the downside. You have seen that this candle is not this candle, right? They are different. This is a red one, this one is a green one, which simply means this is in a downtrend, this is in an uptrend. I hope you get that. Yes, even here, this is in an uptrend, this is a downtrend. Hopefully you get it. So if we come back in our IFC candle, we are going down with the market, we are going downwards. You understand? Just relax and enjoy the lecture. So how do we mark IFC zones? Now we are about to start marking up IFC zones. Number one, identify the candle. Always identify the IFC candle before marking it. You can't mark out something that you don't know. So you need to understand it, you need to know it, you need to identify it in the market. So that's the thing. Mark out the high and low of the identified candle. So mark out the what? The high and the low of the identified IFC candle. This is an IFC candle. We mark the high and the low of it. We mark it out like that, guys. And the distance between the high and the low is zone we are looking for. So is the zone that we are looking for. So this distance from here up to it, this is the zone we are looking for. This is where we are entering from. So meaning we enter from any position. So guys, you can start entering from here. You're just making orders, guys, until you put there your stop loss just above this same IFC zone. Guys, what I'm teaching you, you risk so small, but you gain a lot. So that's a thing you get to understand soon. Okay, which time frames are those candlesticks seeing? Mainly price is fractal. I always say that. Hence these candles can be seen from any time frame. Any time frame you can spot them. Assets like boom and clash, they are assets that I trade me. I've already said this. I already trade assets like boom and clash. So I'm only giving you the things that work out for me. Make it very difficult to see such candles on the 1 minute time frame. Hence for the particular asset which will utilize the higher time frames. So for this particular asset, what I'm trying to explain here is that we only go for higher time frames, like 4 hour, 1 hour. We utilize such higher time frames when spotting this, because on the 1 minute, honestly, if you have traded boom and clash, it doesn't show anything. It doesn't show anything in terms of your IFC candle. But I've ever I've ever catch the trade on the 5 minutes IFC candle. Yeah. How do we trade IFC candle? This is where now I need you to be closely now get the concept. This is where you get the concept from. Identify the IFC candle, number 1. Mark the zone, number 2. Zone of IFC candle. I've already shown you how you mark your IFC zone. Yeah. Wait for price to retest the marked zone and enter, guys. Enter, risk it. Oh, the moment you just see the market just retesting that zone, risk it. Oh, risk it. Oh, for example, the example below here. Look, guys, the moment you mark this zone up, you see, we have marked this. This from the top here, we have marked. Even from the bottom, we have marked this zone. So this will be our selling zone. Don't even be lazy, guys. Just mark. After marking them, you even write down there. You write in you write it to say this is my selling zone, this is IFC candle, this is my selling zone. The moment the market comes and retests it, guys, you enter from here. Your stop loss is somewhere here. And you ride with the market down here. That's a concept here. So you enter from here, your stop loss there, then you ride with the market here. So for example, the market will be moving like it's moving like that. The moment you see the market reach that point, right, you won't know if the market will still continue going up, right? But the moment you see the market breaking the market structure, this is a support. You see, this is a support, and this on top here is a resistance. You see, right? The moment you see it break this, the moment, guys, you see it break this, don't enter from here, please. Don't enter from here. Most traders enter from here, then they go with it will just move a bit, then it will go in losses, and people will lose money. No, me, I saw that the market after just after the market took me out, the market just reached a certain zone here, then it went down, it went in my direction. A lot of people cry like that. No, after blowing my account, then it went my direction. This is the concept that they don't know. What happens is this: when the market is moving, boom, the moment it breaks this, you label this break of market structure. I've already taught this. The moment you see a breakage in the market structure, you come down like that, then you wait for the market to do that. Already here, it's showing you an indication of what? A change in structure, because this is also can be noted as a flip zone like we already talked about, but here it's not that much clear. So you just wait for it to come and retest your zone that you have already marked here. So what will prompt you to mark this out is because you have seen what? A breakage in the market structure. And the moment it qualifies, that's the thing that qualifies an IFC candle. If there is a breakage in the market structure, and if at all at any point this support becomes a resistance. If you see, the market was here, so people were seeing this to be a resistance, because the market was coming from down here. Then it went like that, then it had to retest your IFC zone, then it went way down there. Especially on boom and clash, you will see this. Okay, so this is a practical example of what I'm talking about. I got this screenshot from, I think this is boom or clash 500. Yes, I just got a picture from there so that you get to understand how I caught this trade. I traded this trade and it gave me money. So what happened is that the market was moving in an uptrend like that. This is your high low, and this is your high, and this is your high low. And look what happened, guys. The market reached this zone, then it had to break. The moment you just see it passing the previous low, guys, you note this down, you mark it like that. Then you also mark your IFC zone, you mark it. So the market, what we are waiting for now, guys, is the market to return back here and ride with it. Look what happened, guys. The market reached this zone, it came, we marked from here a break of market structure. Here you see break of market structure, that's how we marked. I marked like that, but I was just waiting for that. It went a bit like that. A lot of traders will be like, okay, the market will start going down. Some traders were making, in lower time frames, were making orders from here. Then it had to go up and retested our IFC zone. Just, you see what I'm talking about? Just immediately you start entering from here. You enter, then your stop loss will just be slightly above this IFC zone. Then the market will actually go down. So you're trading from here to here. So this is what happens when traders are trading. The banks don't really enter. Banks enter from here. So you, as the market comes to retest the IFC, banks only look for IFC. They only look for IFCs, guys. They only look for IFCs. So the moment they see an IFC there, they will enter from there. So you enter together with the banks, then you ride together with the banks, and in most cases the market will come and have a retest in this zone, this break of structure zone. That's where a lot of traders will enter from very right in the market. They will enter from here, then they will ride, they will get some profits on their lucky day. But for you already know what you were doing. So basically that's it. How to look out for such zones, for flip zones. How to look out for flip zones. So for you to look out for flip zones, you need to see if the market is moving like that. It makes it was in an uptrend, it makes a lower or a higher low, then it moves, and the moment it makes an higher low, it's equal to this. Some people will say that no, here is a double top. Some people enter from here, a double top, they'll enter from the double top. You mainly you have an additional way of entering the market. You not only enter when you see a double top, you can enter the market even though you have missed it. Yes, you can enter from here, but you're not that much sure if at all the market will still continue going up or it will go down. So you can enter from here, but if you missed that trade, you wait for a flip zone to happen. So this is a flip zone. The moment it happens, then this will be an area of liquidity. Yes, this will be an area of liquidity. We'll learn about liquidity areas. So you just wait for a flip zone to happen, then it goes up there. The moment it reaches there, this is what we were talking about today. You enter from here, then you go with the market there. Yeah, basically that's it. Thank you so much for watching the video. Let's just quickly do some analysis, but I've basically even given you an example here. But let's go on charts and try to look for these and also practice them as we can, so that we get to understand what an IFC candle is all about. Thank you so much, guys. I hope you have learned a lot from here. Just ensure that you practice what I'm teaching you. This is how you make money in the financial market. There is no magic, there is nothing. If you don't learn, you won't make anything. So just put yourself to learning, and it will definitely pay off. Thank you so much, and always remember, something you have not read, something you have not seen, something you have not practiced, you don't know. So ensure that you do the practice, you do the learning.